Darius, if I look at your own portfolio, most of your investments are in consumer-facing industries. Are you betting big on these businesses? Why do you find F&B so hot?
Yeah, so you're right. We are a sector agnostic fund, so we invest across sectors. But within that, we believe there's a huge potential in the consumer space in India. Essentially, anything that bets on the upwardly mobile, urban, young Indian consumer, we think is an attractive bet because there's tremendous potential for growth. Within that, within the consumer space, food and beverages is clearly a large play. We're seeing packaged foods and beverages on the FMCG side have a lot of growth potential because of the relative lack of penetration in the Indian markets. We're also seeing on the eating outside investment opportunities in the restaurant space. We're seeing higher amount of disposable income, greater number of double income families, and as a consequence, there's more opportunities and more avenues to eat out, different kinds of restaurant formats and brands and cuisines that are available. So we think the eating out space or the restaurant space is also one that's going to enjoy great growth. In addition to that, other areas in the consumer space also, such as specialty retail, such as multiplexes, such as education and healthcare services, we think will continue to see very interesting growth momentum.
What would you then say, Darius, about the fundraising environment? Would you say it remains challenging and tight?
Yeah, fundraising certainly remains tight, especially for India. India is no longer the darling of investors like we were 5 years ago. Having said that, if you can demonstrate a track record of having shown exits and return money back to your investors, then the good thing is that there is certainly money available for fresh investments from investors into funds. But the fact of the matter remains is that you first need to demonstrate a track record, and only then will you be able to raise additional capital.
I have one final question. When in a slowing economy, are you seeing promoters' expectations of valuations getting a lot more realistic? Is that helping, in a sense, deals to happen?
Yes, that is a positive aspect. We're seeing that promoters are getting more realistic about expecting valuations that are reasonable and that allow for fair upside for the investors coming in. And on the flip side, we're also finding that because the private equity industry in India has matured and has gained more experience, private equity investors are also getting more rational in terms of evaluating and pricing the risks associated with investing in Indian enterprises.